You know how sometimes the stock market just coasts? A few bumps here and there, maybe, but nothing too wild.
Yeah, sort of steady.
Exactly. And then, bam, a day comes along that just completely snaps you to attention. Wednesday, April 9th, 2025. That was one of those days.
Oh, absolutely. A real roller coaster. We've been digging into it, looking at reports from, CNBC, MarketWatch, Forbes, BBC, trying to piece together what happened.
Right. And what really jumps out is how fast everything changed, didn't it? Seems like it all hinged on tariffs.
It really did. Big news on the tariff front just shifted the whole mood.
And that's what we're going to unpack today. Why the huge swing, what was actually announced, and maybe more importantly, what does it really mean looking forward? We've got a good pile of info here.
Yeah, the goal is to sort of sift through it, find the key takeaways.
Okay, so let's set the scene. What did things feel like before that Wednesday? What was the market mood?
Well, imagine things were already pretty grim. Our sources keep talking about this brutal 4-day stretch right before April 9th.
Brutal like that. How bad?
Well, the S&P 500, it dropped a shocking 12%. The Dow lost over 4,500 points, and the Nasdaq was down more than 13%.
Wow. Okay.
Yeah, and by Tuesday, the S&P was like inches away from hitting official bear market territory. That 20% drop mark.
Inches. You could almost feel the anxiety building.
Yeah.
And what was really weighing things down? Just general economic worries or?
No, it was pretty specific. The main thing was these escalating trade tensions. The U.S. had slapped that massive 104% tariff on Chinese goods.
Right.
And China, well, they didn't take it lying down. They hit back with an 84% tariff on U.S. imports. That kind of tit for tat really worries investors, raises fears about, global growth slowing down.
Yeah, that makes sense. So not just abstract fears. We were actually hearing some pretty big names voice concerns too, weren't we?
Exactly. Like Jamie Dimon over at J.P. Morgan Chase, he actually suggested a U.S. recession was looking likely because of these tariffs.
That's a big statement from him.
It is. And Neil Kashkari, he's the president of the Minneapolis Fed, he basically said the tariffs made it harder for the Fed to think about, adjusting interest rates because tariffs can push up inflation, which complicates things for them.
So the big financial players were sounding alarms. Were individual companies already showing signs of strain?
Oh, definitely. Even before the market opened on the 9th, you saw Walmart. They actually lowered their operating income forecast, said it was because of the tariff uncertainty.
Okay.
And drug companies, pharmaceutical stocks, they took a hit too. That was after President Trump said a major tariff on pharmaceuticals was coming soon. Just the announcement caused ripples.
So market down, experts worried, companies adjusting. Looks like the stage was set for more pain.
But wait, there was that weird thing with the China ETFs, right? Some funds focused on China were actually up in pre-market. How does that work?
Yeah, that's an interesting counterpoint. The thinking there probably is that the companies in those ETFs might be more focused on their own domestic market in China.
So if they're selling mostly to Chinese consumers, U.S. tariffs on Chinese exports wouldn't hurt them as much. Might even help them a little inside China if stuff gets more expensive there.
A bit insulated depending on the customer base. Makes sense. And amid all this nervousness, President Trump was on social media, right? Sending messages.
Oh, yeah. Classic Trump style on Truth Social. He posted, "Be cool," in all caps. So everything is going to work out well. And then followed up with, "This is a great time to buy." Also all caps. It's kind of remarkable how those direct messages can sometimes sway sentiment, even before policy actually changes.
Like getting commentary straight from the source.
Okay.
So picture painted, market under serious pressure, trade tensions sky high. Then the news dropped, the news that flipped everything. Tell us about the tariff announcement.
Right. So it was about 1:20 p.m. Eastern Time. Forbes pinned down the time. President Trump announces this 90-day pause on what he called reciprocal tariffs.
A pause.
For most countries, yeah. He said they dropped to a flat, universal 10% rate. But, and this is really key, there was a huge exception, China.
Oh.
Yeah,
What happened with China?
their tariffs actually went up, increased to 125%.
Whoa. So relief for most, but doubling down on China, that's quite a move. And the market reaction, I assume it wasn't subtle.
Subtle, no way. The market just exploded upwards. The S&P 500, it jumped 9.52% in one day.
9.5%.
Yeah. Biggest one-day gain since, the 2008 financial crisis, and the third biggest since World War II.
That's historic. What about the other indexes?
Dow Jones shot up 7.87%. That's almost 3,000 points. Biggest point gain since March 2020, early pandemic days. And the Nasdaq, it surged an incredible 12.16%.
That's awesome.
Biggest jump since January 2001 during the dot-com bust. Its second best day ever.
Just staggering numbers, almost hard to believe. And it wasn't just prices, right? Trading volume was crazy, too.
Absolutely. Record-breaking volume. Something like 30 billion shares traded hands on Wall Street that day.
30 billion.
Yeah, highest in, at least 18 years. It just shows how massive the reaction was. Everyone was jumping in, buying, selling.
So what was the administration's spin on this sudden pullback from most countries after weeks of escalation?
Well, Treasury Secretary Scott Bessent came out and said this move, this 10% universal rate for most, was actually Trump's strategy all along. That's the quote.
All along.
Yeah. And he added that the 10% was just a temporary floor, suggesting, more specific tariffs could still come later. And he made sure to note that tariffs on Mexico and Canada stayed the same.
Okay, strategy all along. Interesting explanation. So this massive rally, which companies really led the charge? Where was the relief felt most?
Well, it was pretty much the companies that had been beaten down the most by the trade war fears, like
Wow.
Apple, big global supply chain. They jumped over 15%.
Wow.
NVIDIA, another tech giant, nearly 19%. Even Walmart, remember they lowered guidance. They bounced back 9.6%.
Makes sense. The ones with the most to lose saw the biggest gains when the pressure seemed to ease. Any other sectors jump out?
Oh, yeah. Tesla soared over 22%. Nike up 11%. And things like cruise lines, Carnival, Norwegian, they were both up around 18%. Airlines, too. Delta jumped over 22%.
So tech, consumer stuff, travel,
Mm-hmm.
suggests maybe a return of confidence in the economy?
That seems to be the immediate reaction, yeah. Renewed optimism about spending and activity.
And what about crypto? Did Bitcoin get caught up in this?
It did, yeah. Bitcoin saw a nice jump. And related stocks like MicroStrategy, well, they call themselves Strategy now, I think. And Coinbase, the exchange, they were up significantly, too. The good mood spread around.
Rising tide, lifting most boats. Was anything down? Any exceptions to this massive rally?
Actually, yes. Funny you ask. There was one single stock in the entire S&P 500 that finished the day lower.
Only one. Who was it?
Bristol-Myers Squibb, the big pharma company.
Huh. Any idea why?
Probably just company-specific stuff going on. It just shows, even on a day when the whole market is surging because of macro news, individual company stories still matter.
One lonely stock in the red. Okay, so huge market reaction. What were the analysts saying right away? Was it just pure celebration or...
It was definitely a mix. There was immediate relief, for sure. Gina Bolvin from Bolvin Wealth Management called it a pivotal moment, welcomed the much-needed clarity. So that captures the initial positive vibe.
But the key word is pause, isn't it? It wasn't permanent. People must have remembered that.
Oh, absolutely. That 90-day limit was like the big asterisk hanging over everything. One source said uncertainty is still the bane of markets. And Dave Sekera at Morningstar, he cautioned it was still too early to signal an all clear, because the actual negotiations hadn't even started yet.
Right. The underlying problems aren't solved by just hitting pause.
Yeah.
And couldn't a huge spike like this just be, temporary bounce, a dead cat bounce?
Exactly. That's the worry. Is it a relief rally within a bigger downturn? CNBC pointed out the NASDAQ had its second best day ever back in 2001, right in the middle of the dot-com crash.
Oh, right.
And there were huge rallies in 2008, too, but the market kept falling afterwards. So history shows these massive single-day gains don't automatically mean the storm is over. They can be misleading.
Good point. And what about the China tariffs? They actually went up. That can't be good long-term, surely.
Yeah, that's a critical piece. Adam Crisafulli at Vital Knowledge, he basically said, look, tariffs are not going away, and the China rate is now in triple digits. That's a huge hurdle for any company relying on trade with China.
And it wasn't just U.S. actions causing ripples, right? Weren't other places reacting too?
That's right. The European Union, for instance, had already voted to approve their own counter tariffs on U.S. steel and aluminum, and those were separate from the reciprocal ones that got paused.
Oh.
And the EU ones were set to kick in just a few days after this big rally. So it just shows how tangled global trade is. Retaliation can come from anywhere.
Man, it sounds like a nightmare for businesses trying to plan anything.
It really was. CNBC had this really telling example. A company called Honey Can Do International makes household storage stuff.
Okay.
They'd actually been working hard to move manufacturing out of China to avoid the first round of tariffs. And then, boom, they get hit by these new reciprocal tariffs on stuff coming from other places. The CEO called it crushing, incredibly hurtful, just shows the chaos for businesses on the ground.
Wow, you try to dodge one bullet and run right into another. We even saw some weird quick changes from big banks around then, didn't we? Goldman Sachs.
Yeah, that was wild. Goldman briefly raised its odds of a U.S. recession happening later in the year, and then, like, minutes after the tariff pause was announced, they completely reversed course and cut the recession odds.
Really? That fast?
Yeah, it just shows how sensitive everyone was to this trade news, how quickly forecasts could flip based on one announcement.
Crazy. So tons of uncertainty still swirling underneath that huge rally. What about the Fed? Did the pause change what people thought about interest rate cuts?
It did, yeah. Traders actually started betting on fewer rate cuts from the Fed for the rest of the year.
Why is that?
Well, the thinking was if trade tensions ease up a bit, maybe the economy won't slow down as much as feared. So less need for the Fed to step in and cut rates to boost things.
Fascinating how it's all connected. Tariffs, markets, Fed policy, constantly reacting to each other.
Huh.
Okay, let's go back to President Trump. What did he say after the market had its massive jump?
Well, he commented that people were getting yippy and a little bit afraid before the pause happened, sort of suggesting the market anxiety was maybe overblown. And he also said he believed China wants to make a deal, kind of framing the pause as maybe a tactic to get negotiations going.
Projecting confidence.
Yep.
Okay, so finally, let's put this huge day in perspective again. Third biggest gain for the S&P since WWII, you said. How do days like that usually fit into the bigger market picture, historically?
Yeah, it's a really rare event. Forbes noted that since 2000, before this day, there had only been 18 other days where the S&P gained more than 5%.
Only 18 in over 20 years.
Right. And almost all of them happened during major crises or periods of big stress. And like we talked about, there weren't always reliable signs that the worst was immediately over.
Can you remind us of those examples again?
Sure, like during the 2008 crisis, you had multiple days with 5% plus gains, but the market bottom wasn't for months. Same with the dot-com bust big rally in January '01, but the market kept falling. Even the rally in spring 2020 after the pandemic hit took time to become a sustained uptrend. The last really big one before this was November 2022 on inflation news, and that rally faded pretty quickly too.
So these huge up days, while exciting, can definitely be head fake sometimes. And the NASDAQ story is similar. Second best day ever happening during a crash.
Exactly. The Nasdaq's best day ever was January 2001, smack in the middle of the dot-com implosion. It just hammers home the point. Massive rallies can happen in really bad markets. They don't automatically signal sunshine ahead.
And one last thing, it wasn't just the end of day percentage, but the swings during the day were huge too, right?
Yeah.
That's another great point. CNBC highlighted that the gap between the S&P's highest point and lowest point on that Wednesday was the biggest since October 2008.
October 2008. Peak financial crisis volatility.
Precisely. So that huge intraday range just underlines the extreme uncertainty and the massive shifts in sentiment happening hour by hour, even minute by minute on that day.
Okay, so let's try and wrap this all up. We had a market under intense pressure from trade wars. Then, a surprise announcement. A 90-day tariff pause for most countries, but a hike for China. This triggers a truly massive, historically large market rally.
Right. Huge sigh of relief, basically.
But underneath that, lots of caution. It's only temporary. Negotiations haven't started. China tariffs are higher. History shows these big bounces don't always last, and companies are still dealing with the fallout.
Exactly. It was an incredible day for the market history books, no doubt. But the fundamental issues driving that earlier anxiety, they didn't just vanish. This pause bought some time, maybe, but the future of trade, the economy, still very much up in the air.
So, for you, our listener, thinking about all this, the temporary pause, the mixed signals from history, what are you going to watch most closely in the coming weeks? Will it be the progress, or lack thereof, in trade talks? How companies are actually adjusting their plans? Or maybe the next batch of economic data? It's definitely a complex puzzle, and hopefully this deep dive gave you a clearer picture of that wild Wednesday and the big questions that still remain.